Hi, good afternoon, everyone. Welcome to Trendy Trading. Welcome to this week's broad market analysis. Well, the first thing I want to talk about dates. It is a short week, so be aware of that. We're going to be covering the 22nd through the 25th, although the futures have been running since Sunday, and we'll talk a little bit about that towards the end. Now, my format's going to be just a tad bit differently. I'm going to show you Trading View first, and then we'll get into the Think or Swim or the neutral strategy that I always talk about. But first, I want to show you the bigger picture so that everyone understands kind of where we are. Now, I did send these out on Twitter, so please look at the charts there. You'll also see some of the annotations on notes. You will also get all of this in the newsletter as well. So the SPY, what I'm looking at here is a weekly. There's a lot of things that I want to point out, but first, let's go ahead and read this. 2 weeks up and 2 weeks down. Okay. Note that the 618, that's going to be this yellow line where it says 618, or the golden Fibonacci level, was tested 2 times during this period, and bulls were unable to hold this level. Last week, we closed under the EMA cloud. The EMA cloud is simply this cloud here, and it's used for a visual. And basically what I have in here is the 9, the 13, and the 22. No secret. All right. And basically when we're above that cloud, we're looking for trend to continue to the upside. And when we are below that cloud, what happens is the bottom of that cloud, meaning right here, is resistance until proven otherwise. So as long as we're staying underneath that cloud, the direction is sideways to down. It's not until we get into that cloud that we start to think maybe we found some support. Now, this is a big deal as the cloud is now resistance in the bigger picture. On a bullish note, there has been no new low as the 421 level serves as the crucial level. And that would be right here. And we also have a trendy edge. So you'll hear me talk about trendy edges. These are my proprietary trendy scripts that are used for support and resistance and or supply and demand. I use these scripts to find supply and demand automated, so I don't have to go back and look through several different time frames to find those areas of support and resistance. Okay, so you can see here that support was found at the trendy edge the last time we came into it, which was at around 24 January 2022. And what you're noticing here is what we call an H pattern. So the H pattern, basically price comes up into resistance at some point, bears are in control, and then we start to form that lowercase h. The 427.45 support level is my future trendy level. So our scripts are always running for future levels. And the level that I'm talking about is going to be right here where this green line is. Instead of pointing you to the scripts themselves, I went ahead and just drew a line on here. And that's what that 427.45 level is. So this level is very important to me because it's a high level of support area. If it were to come in here, we should find some sort of bounce. Now, mind you, the futures are 54 points down on the ES futures currently. Now, where we open up tomorrow morning, we do not know at this point, but roughly that's another $5.40 down on the SPY. And the SPY closed on Friday at 434, so that puts us below 430. Okay, but not quite into the 427 level. So please note that even if we gap down quite a few points, that we could be gapping into this major level that could end up being a nice support level for the SPY. The biggest thing for this week is the theme. Will the previous low hold? Okay, and what I mean by previous low is I mean this period right here when we came in at around 24 January where we found this low. Because overall, everybody's going to be looking at this, right? Technical traders are going to be looking at this and saying to themselves, if this breaks, well, you need to watch out. Now, what I'll be looking for, if for some reason we don't hold my support level up there around 427, of course, does that turn into resistance? What's supposed to be support, does it turn into resistance? And the way that we do this, let me go ahead and zoom in really quick for you, is let's say we gap down here, all right? And let's say that we continue to fade. I want to see a really quick jolt to the downside, but then a push back up towards this level. And then I want to see sellers come back in and make a new low. And then that then tells me that this is now resistance and not support. And of course, we would be looking for that double bottom here, right? So down into this area. From there, it's the same thing. These are major levels. A lot of technical traders are going to jump onto the short side, but most likely what they do, especially in this volatile market, is they're going to pick things up to come back and test. And then I need to see that lower low before I get fully committed to a continuation to the downside. Now, far as the trendy edges are concerned, this is support until proven otherwise. And so far, we have not made a new lower low. Another very important tidbit that I want to explain to you is that this is the first close underneath the EMA cloud since going all the way back to right here. Okay, and that is roughly 24 February 2020. So almost 2 years ago, folks. And this is around that COVID time frame where we had that really nice big fall into another demand level that we don't need to really talk about, but you can find it on the chart here if you just look down and to the left. Okay, so what's to happen this week? Again, it's all about whether or not we take out the previous low, and are we just gapping down into a support level to make a new higher low? Again, we're going to need to wait and stay patient. Let's go ahead and move on to the Qs. All right, so the QQQ. Let's talk about the notes that I have placed on here. Price remains under the cloud. And as I say, the easier trade is below or above the cloud. This is very true. If you think about it, when you're in the cloud, it's never that easy. It gets a little rocky. It's a little bumpy. It's already not easy. It's very volatile. But one thing remains the truth. We are underneath the cloud, and as you can see, that cloud is resistance until proven otherwise. Now, Friday, we came into my older support level here, and you can see, if you look at the futures, the NASDAQ was actually down about 258 points, folks. 258, you could divide that by about 42, and let's go ahead and see what we get here. So roughly the Qs were down another $6. Okay, so if we go from Friday's close, you can see here at 341.51, we're looking down there towards 335 and some change. Basically, what the futures have done, and even though the Qs aren't running right now, is come right back down into this double bottom or the previous low. So it has tested, but again, really big deal whether or not we open up tomorrow this far down, or tonight do we start to gain some sort of support. We'll see. But the idea here is just like the SPY, that are we going to take out the previous low and dig deeper into this, what we call an inside and up formation? We have a couple inside and up formations here. And so what I've done is just doubled up on those. And that's where you get this green box from. So the question is, do we dig deeper to find buyers? When we run out of buyers, the market goes into search, right? Into discovery mode. Where can we find some buyers who are willing to step up that can actually make a difference in this market? And I'm not talking about retail traders. So again, overall, the theme, do we take out the low? And as long as we stay underneath the cloud, look for sideways to down. Now, major levels for me would be this lower blue line here at around 310 if we were to have some sort of capitulation event or just a nice steady sell-off like we had last week. This is where I would be interested in looking for longs to the upside. And I'll talk about that in a few minutes when we cover the skew. Let's go ahead and move into the DIA and IWM. DIA. Now working on an inside and down, and you can see that momentum is very important here. Momentum has went from a green to a white to a red candle. This tells me that the momentum, again, is sideways to down. And right here, the theme this week, will we test previous lows? I'm going to keep saying that because I want you to understand those are very important levels for us going into this week. I moved the inside and down, and I moved the red box down as well, since there's a new inside and down on the weekly. This is the first close under the cloud since 2020. Right here was the last close we had, folks. The last time we closed under here, we had a snapback rally that took off. Does that mean much? Not really. When comparing it to the SPY, we're talking about this was the last time we closed and where momentum changed from white to red, and this was during COVID as well. Notice, again, green to white to red, And depending on where we open up, we could find ourselves down here towards a 332 level. Okay. All right. So resistance now is here. All right. So how does this work? Well, if you're trading DIA or the diamonds or the Dow Jones, okay, if price starts to push up towards this level, I would be very cautious. This would be an area of resistance that would be confluent with this cloud. So what you could see, and this is how we gauge risk to reward. Let's just say that price came down into a level that I'm looking for the DIA to hold. Okay, so let's say right around this 336 level to 333. I want to gauge where that resistance would be. Let's say I went long, again, hypothetically down here towards the 332 level. I know that I have about $7 to $8 to the upside. I personally like that risk and reward as long as my stop is where I am okay. Okay. So once again, underneath the cloud, the easier trade is sideways to down. I'd be looking for these upper levels to turn into resistance. Again, I moved this red box. This red box was at the inside and down up here. I went ahead and moved it down. Okay. And then you will see my inside and up here. These are the ranges I would expect into this week for the DIA. Let's go ahead and go to the IWM. All right, now nothing's changed here. Weekly price remains bearish until bulls can push above the cloud or price fills lower gap. All right, folks, so this is the same thing. And for our room here, I did not change the blueprint for IWM going into this week. Matter of fact, you'll see the same blueprint there on Thinkorswim as soon as I bring that over and show you. We have an inside and down. And matter of fact, we could move this red box if we wanted to, but if you will, just imagine that that red box is right here at around this yellow line. This is resistance until proven otherwise. Again, you could see right here, let's go ahead and zoom in, that the cloud is resistance until proven otherwise. This does look like a possible H pattern. And if we do have that pullback like I'm expecting, then I would look for 192 to be that major level of support. And if not, look for that double bottom or that test of the previous lows at around 188 or so. Okay. Again, is this the canary in the coal mine? You know, they've been underneath the cloud for quite some time, the IWM, and it stayed under the cloud. So again, resistance until proven otherwise. When we look down into the left, we can see here on the weekly chart that the last time we had a close underneath the cloud was here, followed by a really nice snapback rally. But previous to that was obviously right around the COVID era. Okay, so my theme for these four, SPY, Qs, DIA, and IWM, what I just showed you, is we are underneath the cloud. We're coming close to minor support. If we open up into these support levels, I will be looking on smaller time frames if we get some sort of relief rally. Now again, the bigger time frame, meaning monthly time frame, shows that we can definitely move down more. Remember, there's only a handful of names supposedly that are keeping up the market or holding up the market. So matter of fact, here at Trendy Trading, that will be my concentration going into this week. All right, like Apple. I'll be watching Apple very closely for either a short or perhaps a long. We'll see. But if we really want the market to pull back and you want to see things get very interesting, I would be looking at those 4 or 5 names that are holding up the market. Okay. All right, let's go ahead and move into a few more things here. We're going to pull up the Thinkorswim neutral strategy. Let's go ahead and pull this here. All right, so you guys know how this works, and if you don't, please go to my page over there on YouTube where I explain how to trade the neutral strategy. Again, this is something that I developed by finding supply and demand, support and resistance, Fibonacci, and I combine all those for a higher probability setup. Okay, so the way that I look at this, and disclaimer going into this week, because the pops have been so tight and we haven't got like this really nice push to the upside, notice that I have 4 levels to the upside this week and 3 to the downside. The reason why I have 4 to the upside is because they're tighter. I'm still using candle structure and fibs and so forth to get you those levels, But the reason why they're tight is because I want to be taking profits a little bit quicker to the upside than I would to the downside. The overall trend is down, so therefore the targets to the upside are a little bit tighter. So notice here we have our levels. Okay, our neutral is 435.05 by 429.41. Really don't want to go short unless we start to move underneath that red level. And then this would become, my support for that short, for example. So this right here, and then I look to go short into these levels. Now I was explaining if we gap down big and we gap down into one of the trendy levels down here, I use this as support. So I'm not saying I just automatically wake up and go, hey, I'm going to go long because we're sitting right at this level. What I'm telling you is I think to myself, this could be a nice support level. I then go to a smaller time frame and look for some buy signals on my proprietary scripts, and then I buy. Okay. So, but if you don't have any of that, then sure, you could be looking for other things, maybe a 10-minute range on the open. You could be looking at your EMA cloud on a smaller time frame to see if you want to go long over these levels. But the point of the story is the bottom levels are support until proven otherwise, and the upper levels are resistance until proven otherwise. All of these are trims. If I go short underneath the red, I'm trimming at the white line and bringing my stops down. If I go long over the green line, I'm looking at trimming into the upper levels and bringing my stops up. These are the targets to the upside. These are the targets to the downside. In the neutral, we used to make this box yellow. I think I need to go back to making it yellow so that you understand it is mellow in the yellow. Now we have some advanced traders, including myself, who will trade within the neutral strategy, but here is my point. The neutral strategy is neutral, or this box or this area is neutral because the higher probability suggests that you will get your butt kicked inside the neutral strategy. Outside of it tends to be the easier trade. Let's go ahead and move on to the Qs. All right, so again, on the QQQ, you will notice that we did come into the lower trendy level on Friday. This is the neutral. Same thing here. I want you to take note, 342.85 by 337.96 is neutral. Anything in here, leave it alone. I will tell you real quick that I can trade off the levels that are inside the neutral. Let's just say that we break down into this bottom red level. Now you could say, hey, John, but that's in the neutral. Guys, any levels to the downside are support. Any levels to the upside are resistance. So if we come into, let's just say hypothetically, into 337.96, we open up here, I get a buy signal. I will go long, and my stops will go, in here. And then I'll be looking to trade this to the upside. Okay. Now notice this level here, this pink line would be resistance. This green line would be resistance. The white line, etc. Now let's just say that over the weekend, it's a Fugazi, right? And basically what you're seeing on the futures doesn't really represent where we're going to open up on Monday. Let's say that we gap up, kind of blow everybody off. Say we gap up into this line. What I'm going to be thinking right away is that we're opening into resistance. Let's say that we gap up into the green line. Just like that. What I'm going to be thinking is we're opening up into resistance, looking for a sell signal and then going short. That's how it works. Let's say that we just open up in the neutral and we steadily make our climb. Then of course I would be looking to go long over the green line. Notice the targets here to the upside and downside. Let's go ahead and move on to the DIA and the IWM really quickly. We've already went over these. The DIA, this is going to be our neutral, 341.73 by 337.37. And downside targets, you could see them here. And we'll also have these in the newsletter. And to the upside, these will be my targets to the upside. Remember, trend is your friend. It's overall the most important thing that I do. That's where we came up with the name with Trendy. We want to stay on the right side of trend. I have these banners up here to kind of help you. Also the ATRs to give you an idea of how much we're moving within a week and a monthly and so forth. So pay attention to the banners up here. Overall trend is down. The bigger trend is still actually bullish, and we talked about that, meaning so many names are keeping this market up, and I will be really interested in whether or not those names stay up this week. Okay. All right, IWM, really quick. Nothing has changed here. I did not change the blueprint. So that's good because instead of me going over every chart with you and showing you how amazing the levels are, because I'm keeping this IWM, and you can see right here, 213.22, and I do keep all of these. And you can see here, we go back for past performance. They are very, very good. But I want to show you really quickly how well these work and kind of talk through them with them through them with you so that you understand what I'm looking at, okay? So again, this is going to be Monday, Tuesday, Wednesday, Thursday, Friday. So let's go ahead and, if you will, just kind of go over this. And I understand some of you guys may not be Trendy members, or maybe you've never been a member and you look and you're like, well, why would he go long here? Why did that work out? And so forth. Again, I explain all this in my education, and then it gives you more confidence to understand where that's coming from. Notice that my scripts are within this cloud as well. So on Monday, we actually pulled into a trendy script. And again, when price comes down to a trendy level, we look for it to be support. Price moved up from here. Okay, once price moved over the green level here, you can see we gapped up into T1, close to T2. We found resistance there. There are also some trendy scripts there as well. This yellow one and this pink one. And then we pull back and we closed in the neutral. So this week going forward, I decided, well, we didn't quite hit T2. We're back in the neutral. We're going to keep these same levels. So again, 201.34 by 196, and this is pretty wide for the IWM, but again, I don't want to do much with the IWM unless we start to move back over. Just take note that we do have topping wicks here, and if price starts to move up here, you want to be on the defense, meaning, hey, I like these profits, but don't stay too long because the overall market has not been favorable for the bulls. All right. All right, so let's go ahead and minimize that. I want to talk to you really quickly about the skew. And if you want to look up on Google what the skew is, you're more than welcome to. This is a very straightforward chart for me that annotates when I want to be thinking about risk on and risk off. I sent this out on Twitter. As a disclaimer, I'm pretty much opposite of how I would typically be. Now, last year was very, very interesting as I felt the skew was skewed. We spent most of the time right up here where historically we would be looking to short the market, right? There were so many opportunities, not. There were no opportunities. There were very few opportunities to go short last year, but the skew kept telling us to be careful because the market felt overextended. And again, the skew was absolutely skewed. And so for myself, being transparent, I was not fully allocated most of the year. Okay. Meaning I didn't take these huge risks because we never really pulled back that much. And I kept thinking as an investor or as a trader, oh man, is the market about to pull? So as easy as trading looks, it's not always easy. All right. Down here, what I'm trying to say to everybody, and I said this actually to the room before we even started this year, and this is my projection for the year, is what if they are skewing us to the downside? Okay, this is just a thought. So if you were to put a SPY or really the broad market in the background, the skew would be pulling back, and this is right where we want to be looking for support in the market. So basically, the whole idea is that the majority of the market is fearful, but this is where John likes to start actually putting money on. Well, the skew is down here, but yet the market continues to pull back. Reminds me of here when it's telling me to be careful, but the market continued to push up, defying gravity. Just a very interesting tidbit of information that you want to sit around and just think about. But the idea here is, in most circumstances, I would be buying 60 to 90 days out with calls in the SPY or the Qs or the DIA or I don't know about the IWM, but that's what I would typically be doing. And to be very transparent, I'm completely opposite right now, which is very interesting. So I have hedges on in a lot of places. I have a lot of put debit spreads, puts, long-term SPY puts, and so forth, because again, the overall trend is down and we're still underneath that cloud. Now, I also have some long-term on that is getting beat up as far as options are concerned. But the day-to-day, the intraday trading is not that bad at all. It's more of the long-term stuff that I'm trying to hold. So like the hedges lose a little bit of value, the long-term loses value. My point here is that we're coming into an area where the market is saying, you know what? Start thinking risk on, not risk off. And it's very difficult for traders to do, I'm telling you. Just like you tell traders, hey, buy the dip or buy the bottoms, and they typically like to buy the top. So it's not an easy thing, and I just want to say that timing is the variable. We could sit down here for another 4 weeks and then the market take off and hit all-time highs, and then we're going to go back and look at the skew and go, see, I told you so. But that's not what I like to do. I'm not a hindsight trader. I don't want to sit here and say, I said this, look at me, oh my goodness, I don't care about any of that stuff. All I care about is actually making money with you. All right. And the market is very difficult right now. Timing is the variable. I want to follow the trend, but I also want to take into account some of these tools that are telling me, maybe I don't need to be as fearful. If you think about the SPY, the Qs, DIA, and IWM, they're all coming into at least an area that I think could be support. And this is also telling me, hey, John, the skew is very low right now. You want to start thinking about potentially buying for the long term. It's very interesting. Okay. All right, so let's go ahead and move on. We are going to kind of end it there. If you have any questions about anything, please let me know. Come visit me at trendytrading.co. Come visit me on Twitter at trendyjon, TR3NDYJON. Send me a message if you have any questions about any of this stuff. That's what I'm here for. Come join our community. Right? It's a very awesome community where you're not going to find noise in a chat room. We're a smaller community. We're focused on the same methodology. We're not focused on hype or FOMO or any of that type of stuff. We're here for technicals, and I hope to see you very soon. Either way, good luck to everybody. I hope you do well in this coming week. Keep your chin up. Things will get better.